look at the market today for March 5th, 2025. Overall, it was a positive day, some optimism around the Trump tariffs potentially being rescinded at some point, and I'll get into that in a second. But that was the general consensus, is that things are not as dire as what it looked like yesterday, even though we had the State of the Union address, which didn't really talk about rolling back any of the tariffs. But nonetheless, you still had a nice bounce on the Nasdaq, up 1.33%. S&P was up 1.12%, and the Dow up 1.14%. You had strength in Microsoft and Meta, as well as Tesla. But you had NVIDIA bounce, but only about 1%, and Apple was roughly flat on the day. The biggest weakness came out of the energy markets. The big oil names certainly struggled. Exxon was down 2%. So continued weakness, as looks like OPEC is continuing to increase their production starting in April, and that's weighing on prices. But you had the dollar down pretty big today. So all the other commodities were actually up pretty well. So we'll see if you get a counter trend bounce or rally here in oil pretty soon. I think we might, because I do think oil is generally range bound. But that was the weakest part of the markets today. Utilities also weak, as you saw interest rates rise a little bit on, once again, optimism around those tariffs being rolled back. And so that was the tenor of the market. We did hit some support around the 200-day moving average on the S&P. The Nasdaq actually fell below the 200-day moving average, still bounced in sympathy with the S&P. So there's definitely some support here in markets that could continue for the short term. But ultimately, it's going to depend on what policy uncertainty manifests as. What is the reality of the situation? Is this just a show of force, a show of strength, and then trying to negotiate something that is more advantageous for the United States? Or are these tariffs going to stick? Now, history says with Trump, he's in a lot of ways bluffing, and that he wants to come to a deal, and that this will be short-lived, and he'll get some concessions that he really wants. The only issue is that there's not really a lot that it's understood that President Trump is looking for from Mexico and Canada. And so we'll see what comes of this. But ultimately, there still remains a lot of uncertainty around the tariffs. Now, on the economic front, you did have the ISM services come in a bit stronger than expected. Consensus was 53, and it came in at 53.5. So, a bit stronger, like I said. New orders rose to 52.2 from 51.3. Employment index did rise as well from 52.3 all the way to 53.9. So nice little boost there. The prices did rise, though. Price index went from 60.4 to 62.6. So remember, the services are very, very important when it comes to the broader economy. Everyone talks about manufacturing, and Trump is always focused on, reshoring manufacturing, all of that. But ultimately, that's a very small percentage of our economy. Roughly 25% of our economy is manufacturing. 75 roughly percent is on the services side. So that's always more important. Now, what else came in today? February composite PMI came in at 51.6. Consensus was 50.4. So that was stronger than expected as well. So on the economic front, certainly some positive news. Maybe that's why you got that bounce today. You saw rates rise a little bit and bonds falling because of more optimistic economic news that came out. You also had the Fed Beige Book, and it looked at economic activity that rose slightly over the last 6 weeks. So some optimism there as well, especially amongst some lower income shoppers, though. Price sensitivity did increase. And so the inflation numbers certainly are continue to be impactful for those lower income consumers. Labor availability improved in many sectors, so that was nice. So that should weigh a little bit on inflation. And ultimately, this was a fairly good day for the economy, fairly good day for markets as a whole. Bitcoin did bounce up nearly 4% on the day. WTI did finish down 2.9%. So oil continues to close lower. And what else do we got? Dollar index down 1.4%. You're starting to see some major weakness, major strength out of the Eurozone. Is this all because, hey, the European Union and the members are going to start to spend to try to combat the pullback from America. That seems to be the case here, right? We know that fiscal spending boosts economic output. And if that's what they are looking to do to try to boost their defense in the region, capabilities in the region, I think that would be helpful for the broader economy. And I think that's why you're seeing euro strong, dollar weak, especially when it looks like our fiscal situation is pulling back with the amount of spending really being cut by Doge potentially and beyond. So we'll see what that looks like. But that was the market today for March 5th, 2025.